Good morning, good afternoon, good evening, and good night, no matter where in the world you are joining me from. I am 𝐂𝐎𝐍𝐈𝐎𝐍. This is the Crypto and Cognac podcast, season 7, episode number 3. Welcome to it. We are here live every Thursday, 7 p.m. sharp Atlantic Standard Time. And if I'm here, Henny there, see me, right? It's November, Movember, Brovember. So having a drink with the boys, we're drinking VSOP. So grab a glass, pour yourself a drink. And cheers. It's a celebration. You know why? Because if I'm here, if you're here, if Stevie here, if life is here, and Bitcoin blocks continue to be mined every 10 minutes, it's time to celebrate. So cheers. Shout out Stevie, shout out Anil in the chat. We are here. And as always, before we get started, you see this glass? You see this block of ice in there, right? The same way we have our cognac is the same way we have our crypto conversations. Always the ice rule. I am not a financial advisor. This is not a financial advisory podcast. As always, do your own research. It's all about the ice rule. Information, conversation, education, right? A little bit of edutainment. Shout out to Eddie in the chat, right? Guys, we have an exciting conversation that at times might get a little depressing, but is the question on everybody's lips. Is the question in every crypto chat that I am involved in. Everybody want to know, is it over? Is the bull run that never was over, right? Is this bull run Daenerys Targaryen, right? The queen that never was, the bull run that never was. So we're going to go into it. We're going to chop it up. We're going to look at the various talking points, all the various sentiments, what everybody's feeling, what everybody's thinking. But as always, it doesn't matter what 𝐿luminati tells you. Do your own research, right? So, is it over? What we have seen, right, is that the market has cooled off. The market has had a pullback, however you want to call it, but we are down about 20% from our all-time highs of a few weeks ago of 126,000, right? And for the last couple of days, we have been hovering in and around and under 100,000. All coins being hammered. Sentiment is very low right now. People being liquidated, those who've been leverage trading. We've seen alts from 100 years ago having a moment, but for the most part, what we are seeing is a significant cooling. Is it a well-earned reset, retest of the fear greed index? Is this one of the regular pullbacks that we tend to see during a bull cycle? We have seen in previous bull cycles 20, 26, 30% pullbacks, and things continue. Does it have to do specifically with what is happening in terms of the US government shutdown? Is what we are seeing with the Dixie index climbing and the liquidity tightening fueling this sentiment around risk assets like crypto? So today we're gonna talk about both sides of the coin, right? And we're gonna see which side you guys lean towards more. At the end of the show, I'm gonna tell you guys where I am at with it. Obviously, earlier in the year, I told you guys around October into November, I would start taking profits. That's what I'm looking at, just based on traditional metrics. I would have started earlier, June, July, but I thought that certain things that were happening with the tariffs and stuff, which were kind of one-off events, would have delayed this particular cycle. I thought that the cycle will get us somewhere around 165, 168. I don't know if that's going to happen still, but we're going to go through all of it and we're going to look at it, right? So is it just noise? Are we following the normal historical trends? It's possible. Every single cycle, we have this bearish moment within the bull run where we see 20% drawdowns, right? Historically, before euphoria sets in, there must be some psychological pullback to reset people's emotions. So that's what we've seen. What we are seeing though is on-chain weakness, right? So we're seeing fewer new wallets, we're seeing fewer wallets in profit, we're seeing realized losses continue to climb, we're seeing short-term holders are heading for the exits. The tourists who not here for a long time, they're here for a good time, and when things start to get tough, they bolt for the exit. Yeah, we're starting to see them heading out, right? Thirdly, we've seen, like I said, the leverage being brutalized. We would have come off of an October where we saw $19 billion in future positions get wiped out. So the casino has been shaking people out of their money. So we're seeing people not having those wins on the leverage side to convert into spot positions. So that is impacting things. What we're seeing also is a cooling or a slowing down of ETF inflows, right? So that means that not necessarily that institutional demand is slowing, but the segment of retail that has chosen ETFs as their model or their vehicle for getting into the market, we're seeing that cooling off. Inflows continue, but more of a trickle than earlier in the year where we saw the significant rallies, but also there's less money in the market in general to facilitate those inflows. And then obviously we continue to see a lot of macro headwinds. Treasury yields are still very high, the risk appetite is fading, and of course global liquidity is getting tighter. We're going to talk a little bit more about that in a little bit when I talk more specifically about the Dixie. Now, as it relates to the case that the bull run is not over, we continue to see institutional adoption and institutional interest continue to rise, right? So we continue, even though the general inflows continues to slow, what we are seeing is more and more hedge funds now participating in the market, now offering crypto exposure to their clients. And we are seeing, or we are hearing, that more and more family offices and government treasuries are investing in Bitcoin quietly in the background. So the big money, the what they call the what's the word I'm looking for? Anyway, the mature investment money seems to still be very much interested. We continue to see the regulatory environment, especially in the US, continue to improve. And I would say not just in the US, I would say across the world, except for here in the Caribbean. Hopefully we see something shift with that soon. as well. But we're seeing in US, Europe, Asia, they continue to roll out more significant rules and taxations as it relates to ETFs, as it relates to crypto in general. So what that does, it creates less uncertainty. Less uncertainty creates more confidence. More confidence obviously brings more capital, and especially more mature capital, right? I think one of the things that I think is changing the model of what we traditionally see in terms of cycles is that the market is a little bit more structured and stronger. I think we have, like I said before, a little bit more mature investment players in the space. So we have, custodians that are regulated. We see a significant ETF market. While it does represent retail to some extent, I mean, they are managed a little bit more by, more seasoned investors, right? So I think as compared to, let's say, 2017 or 2021, I think the liquidity is better. I think the infrastructure is a lot more mature. On the technical analysis side, we are seeing some, what I would say is the charts still show that this is a healthy consolidation and not a complete breakout. I know we need to close over, I think, 103,000 at the end of this week to maintain the bullish cycle in terms of the weekly chart. And I think eventually the macro tailwinds that we've been seeing in 2025, I think those things are gonna kind of fade away in 2026, or we're gonna be less responsive to them, right? So some of the tricks that I think were played on us this year, I think hopefully we're gonna learn from them next year, and we're gonna see things kind of level out. But I think what we're gonna see is us move from the boom and bust type experience of a cycle to a more conservative and gradual uptrend, where we're gonna see these pullbacks. But I think over the long term, we are gonna see a more natural uptrend than the significant pullbacks that we've seen in previous cycles. I mean, outside of a black swan event, I mean, outside of somebody like Sailor and Strategy blowing up, I think we're going to continue to see an uptrend. As it relates to the Dixie, the US dollar situation strictly, obviously, we know that when the Dixie goes up, all the assets that trade against the Dixie tend to go down. It just means that as the value of the US dollar goes up, things that are purchased in US dollars, you can get more of it for your US dollar, right? And things like crypto, things like gold, things like oil, even not oil is cookwater, but oil, petrol, you tend to see those things be impacted as the Dixie is strengthened. The fact of the matter is that with this US government shutdown, what we've seen is that the Treasury there's a higher stockpile of cash by the Treasury. We are seeing that a lot of payments are not being able to be accessed. A lot of procurement is not happening. So there's a lot of lack of liquidity out there in the market. And of course, business people, investors, when there is a prolonged shutdown, that creates uncertainty. No market, the markets in general do not appreciate uncertainty. We've known this. We are maybe a little bit more resistant to it from an emotional perspective. Obviously, we see the bigger swings, but we are a lot more conditioned to deal with uncertainty than some of the other more mature markets. That's why we could tolerate 20% correction and continue ticking on and still be asking, are we in a bull run or not? And not panicking and running around like, you know, Chicken Little that the sky is falling. So I think, obviously, my position is this. I don't think the bull run is over. I think, obviously, what we've come to learn or come to expect from the bull run in terms of that sprint bull run and then that sprint bear market, I think that has shifted. I think what we're going to see now is a more consistent, more marathon type experience. I think as things settle and the US government opens back and people get back to business, we're going to see the Dixie start coming down again. And we're going to see risk assets like crypto start having some life again. But for me, I think the big takeaway is to continue as always, not to invest more than you could afford to lose. Continue to pay attention to what's going on. Right now, I'm not at the stage yet where I'm panicking and I'm taking profits, but that's because I'm primarily in assets that I'm very comfortable holding for the next 4, 5 years, 10 years, as the case may be, you know. So the cycle and what the cycle doesn't scare me as much. So from that perspective, I would say I might be in a different boat to most people, but ultimately, I don't think it's over, right? That's the long and short. I think we might have a blow off top still. I think the next set of all-time highs, once we get to that, I think when that energy burns off, I think that will be it. We will see some consolidation and a longer term bearish period of consolidation. But I don't think it's going to be, well, I hope it's not the huge corrections, 60-70% corrections that we've become used to in this market. Again, as contingent on us not having a black swan event like a FTX, like a Terra Luna, like a, you know, ICO bubble burst and all these kind of things. But for me, those are some of the things that you need to be considering, whether you're on the side of it's over or the side that we still have some time. I think those are the things to pay attention to. Even after the Dixie resets, I think you still have to be looking at on-chain inflows. I think you still need to be looking at ETF inflows. I think you still need to be looking at what smart money is doing. I think you still need to be looking at leverage positions and how they're being impacted. So keep your ears to the ground, your eyes peeled, right? Steven said bring on the white swan. Yeah, we could do it a white swan event. We could do it at Dubai or somebody declaring that, you know what, we buying Bitcoin in mass. Somebody going to war with the US in terms of how much Bitcoin they're gonna accumulate before the end of the year. That could really set things off. But I may not have the big money like Steven have, so I still want to be able to buy my little $10 worth of BTC every month. So if the price continues to go sideways for a bit in the next few years, I'm real good with that. You understand? Every month I would say my little $10, right? And not a recommendation, but if I were you, maybe that's what I'd be doing, right? So guys, that's my time. Thank you guys for another amazing week. Thank you for being with me. Leave China alone, Steven, right? As always, Illuminati signing off. Be blessed, guys. See you all next week. Illuminati OUT out. Be blessed. Love.